Over time, I have come to this simple definition of leadership. Leadership is getting results in a way that inspires trust. Stephen M.R. Covey, from his book The Speed of Trust. Has 2025 quantified the dollar cost of crony capitalism and transactional leadership? Published by Kimmery Thompson. Part 1. The cost to the bottom line. This week, I'm taking a slightly different approach, a more data-driven article. This piece aggregates facts and figures documenting corporate performance statistics now emerging from US companies. As the numbers come in, the question is becoming sharper. Is the Trump administration's unorthodox approach delivering a radical improvement in the lifestyle, well-being, and wealth of Americans? Or is it confirming what critics predicted? Wholesale destruction of corporate and community value. We are just 8 months into the second Trump administration. Normally, that would be too soon to tell whether policies were reshaping markets. But this administration began influencing global relations even before taking office, and it unleashed structural changes almost immediately. The impact is showing up faster and more dramatically than expected. This article is still fundamentally about leadership and leadership styles, so it is not all doom and gloom. Alongside high-profile examples of value destruction, I also highlight hopeful cases where values-led leadership is paying off with a measurable return on investment in both financial performance and cultural resilience. Why this matters now. From my perspective, here in Australia, the first 9 months of the Trump administration have been a case study in transactional leadership, an example of what some would call crony capitalism. The consumer response has been to punish corporations who fail to uphold community standards, an unexpected yet consistent response when they feel the changes are an affront to their community values. Firms that caved to political dogma have seen boycotts, sales drops, and many appear to have sustained long-term reputational damage. Firms that stayed true to community values and the principles of inclusion have maintained trust, grown profits, and demonstrated cultural resilience. As I argued in Leading Authentically in the age of AI, transactional wins often look shiny or successful in the moment, but they erode long-term trust, the foundation of sustainable growth. Tesla, from loyalty leader to customer apology. The most high-profile value destruction case study would need to be Tesla. In just 9 months, Tesla went from an electric vehicle loyalty-driven powerhouse to a cautionary corporate tale. Tesla sales dropped, US down 8%, January to May 2025, Europe down 33%, first half 2025. Historically, Tesla held more than 80% of the US EV market. By August 2025, only 38% of the total EV sales in the United States went to Tesla. The first time Tesla has fallen below the 40% mark since October 2017, reported by Reuters. Demand for Teslas in Australia collapsed. February 2025 sales down 72% year over year. Model 3 sales down 81%, according to The Guardian. In Australia, the backlash made it onto the streets. Many owners put stickers on their cars, saying things similar to, "I bought this before Elon went crazy," reported by The Guardian. Overall loyalty of customers to Tesla dropped across the board. Tesla's loyalty rate fell from a peak of 73% in June 2024 to just under 50% by March 2025, reported by CBT News. This is not just a hit to profitability. It may even threaten Tesla's long-term viability. Once loyal customers decide to turn away, they usually do not come back. Data insight. This isn't just about cars, it's about trust. When leadership choices alienate the very communities who once felt aligned with your mission, the market responds mercilessly. Target. The cost of abandoning values. The retail store Target in Australia is owned and operated by Wesfarmers. Target in the USA is a completely different company. Australian Target apparently pays a fee, primarily for the use of the branding. Target USA has seen an ongoing customer backlash. So far, it has not spread to Australian consumers, but given the way communications spread across social media, many Australians may not be aware that they are different companies. Target USA, once admired as an inclusive brand, chose to enthusiastically retreat from DEI, diversity, equity, and inclusion, just days after the Trump administration scrapped government DEI programs. Forbes reported Target ditching DEI cost the CEO his job and investors $12 billion US. The customer backlash was almost instant and keeps escalating. 11 straight weeks of traffic declines, nationwide boycotts according to Retail Brew. The traffic decline immediately hit the financial results. Operating income fell 19.4% year over year in quarter 2 fiscal year 2025, from $1.61 billion to $1.30 billion, according to Target Corporation reporting and Placer.ai. Data insight, Target's shareholder actions revealed a culture without real commitment to diversity. Diverse clients recognized the inauthenticity and voted with their feet and their dollars. Amazon and Etsy, quiet reputational risks. Amazon quietly pared back DEI, but given its size and influence still landed on activist rolling boycott lists, alongside the more enthusiastic response by Target and Tesla, reported by Forbes. Not all customer actions were related to corporations being out and proud about conforming with the Trump administration rollback of DEI programs. Corporations indirectly supporting the Trump administration controversial initiatives has also resulted in a quick response from well-informed and deeply connected consumer groups. Etsy. The platform drew outrage for listing merchandise celebrating a controversial detention facility, Alligator Alcatraz. Consumer groups promoted boycotts that spread across the platform. It kept escalating until Etsy pulled the items from sale, reported by Fast Company and TechCrunch. Data insight. These are reminders that silence or half measures are not neutral. In a time of hyper-digital connection, there is digital accountability. Communities demand corporations maintain a real, authentic culture. Consumers will punish platforms that signal profit over stated principles and values. Canada fights back, bourbon and tourism. Canadians liked American bourbon and loved booking an annual holiday to the US of A. That all changed with the Trump administration aggressive rhetoric, targeting Canadian sovereignty and progressing with punitive trade penalties. Decades of trust and profitable trading across the border have all but evaporated within weeks. The crony capitalism rhetoric and trade wars with Canada produced immediate losses. Ontario's retailer LCBO pulled US alcohol, worth up to 965 million Canadian dollars annually, from shelves. As reported by retailer LCBO, Brown-Forman, Jack Daniels, reported a 59% Q1 sales drop for Canada, calling it worse than a tariff, according to the spirits business. Canadian tourism bookings to the US fell 70 to 76%. Border duty-free shops saw sales drop 40 to 50%, some as much as 80%. As reported by OAG and Forbes. Data insight. When customers and trade allies stop trusting you, they look elsewhere. Much of the loss is likely to be permanent. For Canadians, Jack Daniels, like Tesla, now represents values they no longer want to align with. Part 2. The return on investment of values-led, inclusive, strengths-based leadership. The flip side of this ledger is far more hopeful. Values-led leadership doesn't just feel good, it delivers trust. That trust can be expressed as sustainable financial returns. The reason I started writing these articles is to encourage organisations and individual leaders to respond differently. It seemed to me that the benefits that can come from alternative leadership styles were not being frequently explored. What is wrong with global leadership, or worse, sense-making of senseless actions, seems to be sucking up the mainstream and independent media's attention. I feel having a conversation about the viable leadership alternatives must also have a place in the current leadership conversation. The evidence shows that when corporations do respond with authentic commitment to community-held, respectful and inclusive values, they are rewarded with loyalty and elevated financial returns. Research shows authentic engagement and trust pay dividends. Gallup reports, companies with high employee engagement see 23% higher profitability and 18% higher productivity. High trust workplaces report 50% higher productivity and 74% less stress, as published by Paul Zak in the Harvard Business Review. Data insight. This research validates the value of considering positive psychology principles. When people work in their strengths and feel trusted, they flourish. And when people flourish, performance is optimized and organizations prosper. Authenticity and values, delivering the ethics premium. The research by Ethisphere Institute demonstrates that ethical practices are not just a cost or a matter of good reputation, but a strategic driver of superior financial performance. Ethisphere Institute research shows world's most ethical companies outperformed peers by 7.8% over 5 years, 2020 to 2025. Data insight. While cronyism and transactional leadership appear in the media to be the only options for successful leadership, evidence shows the opposite of cronyism delivers more sustainable returns. Authentic, mission-led cultures treat ethics as a hedge against risk and a multiplier of resilience. Positive return on investment in 2025. Costco, profits with principles. Not all corporations caved to the Trump administration policy pressures. While Target went out and proud to comply, Costco went out and proud to double down and reaffirm their DEI commitment. Their customers remained loyal, and new customers were drawn in with a $222 million bottom line profit improvement in 1 quarter. The board's public stance, detailed in proxy statements, argued that DEI strengthens employee retention, enhances customer experiences, and drives innovation, which are crucial for the company's success and values. This position was further supported by the overwhelming shareholder vote to reject the anti-DEI proposal in January 2025, as reported by AP News and Yahoo. Costco's board defended DEI publicly. Q3 FY 2025 net sales for the quarter increased 8.0% to $61.96 billion from $57.39 billion last year. Net sales for the first 36 weeks increased 8.2% to $185.48 billion from $171.44 billion last year. Net income, $1.903 billion versus $1.681 billion year over year, led to a net income increase of $222 million as reported by the Costco Corporation. Costco defended DEI and still delivered plus $222 million year-over-year profit growth. Data insight. Costco proves the point. You don't need to abandon your values to survive political pressure. In fact, standing firm enhances trust with both employees and the consumers and stock market rewards it. The written form of this article provides a graph of the change in the Costco share price, compared to the change in price of the Target shares from December 2024 to August 2025, statistics from Yahoo. Apple and Ben & Jerry's, why hold the line? While gifting the Trump administration a gold bar with the Apple logo attached may have earned Tim Apple a cameo in a South Park episode, when it came to the big cultural decisions, Tim Cook and Apple shareholders said no to abandoning their diversity and inclusion values, reported by Yahoo. Apple shareholders voted 97% against ending DEI, with management warning that scrapping inclusion would harm operations, reported in TechCrunch and ESG-Dive. Ben & Jerry's co-founder Ben Cohen said corporate America's retreat from efforts to boost diversity and inclusion amounted to appeasement, that just encourages bullies, reported in the Financial Times. Ben & Jerry's actively continue to resist DEI rollbacks promoted by the Trump administration. It appears to have contributed to a public conflict with their own parent company, Unilever. Reported by CNN, Data Insight. Authentic leadership is about long-term stewardship. The shareholders of these global corporations understand that values aren't a side project. They are the business model. To survive, management may engage in performative gestures, but they must insist core principles remain intact for sustainability. 2025 insights. So far, we still have some time to go in 2025, but the 2025 ledger is showing a clear trend. Punitive transactional leadership and crony capitalism has delivered billions in lost trust, market share, and long-term sales. Tesla's loyalty collapse could take decades to reverse. Target's 19.4%, US $313 million quarterly income hit. Ontario's $965 million Canadian dollars alcohol boycott, and a 70 to 76% drop in Canadian tourism to the US. Values-led leadership has demonstrated measurable return on investment. Gallup's productivity and profitability gains. The Ethisphere 7.8% ethics premium. Costco's plus $222 million quarterly profit growth while defending DEI, and Apple's 97% shareholder vote to stay the course. In leading authentically in the age of AI, I argue that leadership is entering a new era where trust and authenticity are the only sustainable currency. While there has been an unprecedented level of pressure on US and global corporate leaders, 2025 is tending to prove the point. Self-leadership reflection prompt. Am I making decisions that sacrifice trust for short-term gain? Or am I building authentic, values-led practices that deliver returns 5 years from now? Even if the headlines suggest otherwise, making the inclusive choice is the right choice for long-term growth, resilience, and sustainability. Yet it may be the harder choice for this moment in time. Thank you for engaging with this article. Please add your comments and share your insights. My executive briefing, Leading Authentically in the Age of AI, a strengths-based framework for peak performance and purposeful flow, is now available in paperback, Kindle, and audio format. You can find all publishing options for this executive briefing report at www.authentically.business. Or take up a paid subscription here on Substack and get the audio and PDF version as an included download with your subscription. You can cancel at any time. Feel free to connect on LinkedIn, and to get these bi-monthly articles delivered by email, subscribe for free here on Substack.